Okay, guys, back again with episode 3 of Top Down Analysis. So, what we're looking at today here is New Zealand dollar versus Canadian dollar, which is the NZD-CAD. So, this is 45 minutes time frame. So, here we can already see that there is some sort of a descending structure, but we can never start analyzing the market from smaller time frames without first analyzing bigger time frames, and remember, we go to on bigger time frames just to see the overall trend of the market, just to see where the market has to push in the near future. So here we're on the weekly, and here on the weekly we can already see how the market was moving. So this is the overall movement of this market. So this is where NZD started formulating, started moving, started its own movement. So we can already see that when this NZD market started, we had that first touch here, and then that second touch there, and then the third touch there. So this was just some sort of a descending structure. We had that first touch there, and then we had that second touch there, and then the market break out of the structure on that third touch. So every time when the market breaks out of the structure, it has to come back and complete this 90% rule. But let me just remove this so that we don't get confused, because if there are a lot of things on the chart, we'll get a lot of confusion. So right now what is happening here is that after this breakout, the market moved in an impulsive manner. So right now here we have some sort of a ranging market or a consolidation market. Because this is a bigger time frame, we're on a weekly time frame, right? When we go down to smaller time frames, we'll see that this consolidation market doesn't exist there, because smaller time frames are building blocks to higher time frames. So here I can already see that we can see that the market is trying to formulate a descending structure, which that descending structure simply means it's a continuation pattern to the upside. Simply it could be a continuation pattern to the upside, because we can see that how the market moved from these levels right here. The market moved impulsively, so now the market is just trying to rest. So it's trying to indicate to us that it is not even done moving to the upside. So right now we have that first touch, second touch from the lowest low. We have our first touch there, we have our second touch right there. So the market right now, if I can just zoom inside of this structure just to see other movements that has been happening inside of this structure, we can already see that we had that ascending structure right there. We had that first touch there, second touch there, third touch is always our highest probability to enter the market. So every time when the market reaches that third touch, it has to break to the upside or to the downside. So if it's an uptrending structure like this, the market will always break to the downside. If it's an it's a downtrending structure, the market will always break to the upside. So we had that first touch there on the upper level of the market, which is the highest high of the market. We had the second touch there, we had our third touch there from the highest high. We also had our first touch there from the higher low, and then our second touch there from the highest low, and then our third touch there, which has been broken. So if the market broke that level, the market still has that responsibility to complete the 90% rule of the structure. So if the market does come right here to complete the 90% rule of the structure, it will also be coming down for that third touch of the structure, because we can already see that we already have our first touch right there, we already have our second touch right there. Now we are just waiting for that third touch there. So we have an opportunity to enter the market and go down with it. We have that opportunity to enter the market from these levels and come down here with it. When the market reaches this level, it will continue to move to the upside. So what is happening right now is that we have to scale this market down to the daily time frame just to see properly what is really happening on this market. I can already see that there was a support level that was broken. um, Now the market is just trying to retest those levels. After retesting those levels, the market will continue to move to the downside. So here we are on the daily. If we can just remove some of the things that are no longer necessary. um, Here on the daily, we can already see that we have that level, that level right there, which to me the market is just retesting that level. So I think the market is done retesting this level. The market might just continue to move to the downside, or the market might just continue to push to the upside and then create that double top and then continue moving to the downside. So why am I saying that the market might push to the upside? It's because I am already seeing some type of a structure right here, which that structure to me seems to be reliable. But we already saw where the market has to go first on bigger time frames, right? So there are a lot of things that the market might do right here, because the market is in the middle of a trend right now. So we don't know what might happen right here in the middle of this movement. So the market still has that responsibility to go down for that third touch